It's always important to really understand, and listen, even if you're not a financial advisor or a fiduciary, it's important to have some kind of grasp of what's happening, not only globally, but also economically in your own backyard, as well as in your own ecosystem. Not only where you are today, but where you want to go based on a financial map, and most importantly, how you can get there in the most efficient manner. And for that to happen, it requires a lot of self-discipline to build a bunch of financial professionals or educators around you, accountant, fiduciary, insurance agent, that you can rely upon to gather information and make good decisions, especially when economic winter comes. So today we're going to talk about, are you prepared for emergencies? Because there's no calamity bell, there's no warning, no one's going to tell you what's going to happen next Tuesday at 3 o'clock. I'm with my partner, Eddie Gartner.
Hey,
What's up,
Rod.
bud?
How's it
How you
doing,
brother? It's good to see you, my man.
Good to see you.
What's going on, brother?
Happy that you're back. You had the trip out to the Ukraine, and it's kind of interesting doing a podcast about being prepared for emergencies after just having you out there. And so.
Yeah, listen, I think that, when we look at here in America, in my own circumstance, you look at 2008, which was a crisis that came seemingly out of nowhere, but the writing was on the wall. We know there was we had COVID last year or the year before, and that came out of nowhere. There was no warning, although I'm sure other people would say there was warnings. And if I was to conversely look at that and look at the Ukraine, they were like having dinner on Monday, preparing for their next 6 months in life, and by Wednesday there was like missiles coming through the building, right? So all way different emergencies, whole different level of understanding human resilience,
right?
Which is what I was able to witness over in the Ukraine, and kind of staying in pace with that.
Yeah.
All mindset does matter when it comes to things that are unpredictable as well as predictability.
And I think the things that happen globally, right? The world's become this small place. So things that are happening in the Ukraine, which some people may not even know where that is, but it's affecting them today. And so a lot of the things that we're hearing about is volatility. Some people out there are asking the question, well, what is volatility? Can you put that in context for them?
Yeah. So volatility is, when markets go up and down. If they go up and down sharper like this or like this, where it's a little bit more of an either uptrend or downtrend. And right now, I think that, and by the way, I'm not an economist. I'm just going to kind of speak on my own experience. But I think that when you're in a mindset of chasing return, whether it's buying Bitcoin, back in, last June, July, and August, all the way up until its all-time high of November, whether it was shorting GameStop or, whatever the case may have been on Twitter, those were phenomenal short-term returns that not only created short-term capital gains, but more importantly, a mental dopamine hit, meaning you would think you could do this every single trade. And I personally experienced that back in 2000 with internet stocks. So for me, I'm the guy that has to bang his head against the wall, learn once or twice, and then not make the same mistake the third or fourth time. Yeah. So, with volatility, Ed, I think that the way you eliminate volatility, being exposed with your own money, is by having a proper plan in place.
Right.
When it comes to not only what you save on a monthly basis, but how you deploy that capital. And for me, it's always about leverage, liquidity, and control, especially when winter comes economically in any given sector.
So the next question, kind of pulling into what you're talking about there in that long-term plan, right? There's plenty of people that own 401ks, right? They've been putting their money into it, and for the last, I don't know, however many years, that's been going straight up.
Yeah.
Right. So they haven't seen this volatility, and the question they're asking is, well, should they be worried?
Well, it depends. Listen, I don't think it's gone straight up since 2008, but I think it trended up, right?
Yeah.
There was some pockets in there where the market corrected a little bit. And, as we know, 35 out of the last 41 years, January 1st to December 31st, by the time we got to December 31st, the S&P was higher than it was on January 1st, 35 out of 41 times.
Wow.
So, when it comes to people that are looking at their statements every month, they should be careful of that. Now, I do understand that, we're in a situation where some people are going to be retiring soon. And they may have had, hypothetically speaking, $1 million in January that could be worth like $850 now, or even less, because they weren't properly planning the right way. And we do know, my man Billy Kay points it out all the time, that when there's a pullback, it takes that much longer to get back to break even from that pullback. And if, in fact, you sell out at the wrong time, which basically means if you stay diversified with a game plan, it's going to go down even when you're dollar cost averaging. However, if you stay stuck in that mindset, meaning in a good way that you continue to do it, when there is that upswing, it's that much more of a increase in your portfolio based on sticking with that discipline.
Is there anything out there for people that is, obviously people are going to say, well, how do I protect my assets, right? How do I, if there's another pandemic that comes through, if there's another crisis that, seemingly comes out of nowhere, as they always do.
Yep.
What can I do to protect myself from that?
Yeah. So listen, I think that people that watch the channel, they're going to say, hey, all these guys do sell life insurance. And the truth is, no, that's what maybe me and my internal team do. But there's also teams here down the hall that are fiduciaries.
Yes.
Right. And, when it comes to an overall plan and process, you're asking about protection. Is there a way to protect yourself from the market's downside? No. Right. Because there's nothing you could do that could protect yourself on the downside. Even if you bought bonds, you're still at interest rate risk, right?
Yes.
Inflation, all those interest rates going higher or lower. If you're all in the market, then yes, you're at the risk of supply chain demand, inflation being at 40-year highs. The market going up and down, not properly diversified within and amongst asset classes. Meaning you don't, like Ray Dalio talks about 18 different asset classes. If you have that in your world, there's a good chance you could survive any and all different kind of economic turmoil that comes your way.
Right.
But who has that? Who does that? And the goal is to get there. And yes, life insurance is a piece of that. Life insurance is a powerful piece of that because at the end of the day, if it's the right kind of policy, it can balance anything you have and most importantly, create liquidity, especially when things pull back and there's a discount.
Yeah.
And what's interesting about anything in the marketplace, whether it's Bitcoin, whether it's the stock market, whether it's whatever it is, anything that begins to go down, psychologically people sell out and think it's bad versus realizing that everything's on discount. They'll buy a car for $200,000, but if that car for whatever reason drops in price down to $80,000, they won't buy it. Well, with stocks, if Apple's up here and now all of a sudden pull down here, people are not taking advantage of the ability to dollar cost average. And by the way, I am speaking in general terms right now. This is not specific to anybody, but the point is, if in fact you have an overall mental mindset when it comes to your portfolio, and it's not only it sits and fits with what your age is and what your risk tolerance is, you want to stay true to your game plan.
Yeah.
That's how you avoid it.
Yeah, it comes down to that game plan.
Not eliminate it, but avoid it.
You can't avoid, right? You can't eliminate all risk.
You can spread it out.
And the only thing that I would maybe add to that as a thing that people can consider for some protection would be in a retirement portfolio, possibly using an annuity for a piece of that to help give them peace of mind.
Beautiful point. So what you're going to hear, folks, especially when the market pulls back, when the market was running, let's talk about Bitcoin. Yeah. I always say this, the kryptonites kept coming, right? The kryptonites kept coming. Kryptonites, you know who you are. And you get mad at me when I point it out, but you know exactly who you are. Call me, and we can debate it, but you know who you are. Same thing, what happens is when the market declines, we have the annuitites. Is that a right word? Anyway, the people that are going to start pushing annuities. And what's going to happen is, and please don't box us into that, although a percentage of that 401k, based on age, based on what you want as a fixed number in retirement, should strongly consider what that annuity looks like.
Correct.
Right?
Yes.
That's it. So I like to create that distinction. So
it's not the place like the annuitites might say, hey,
annuitites,
take all of your money and put it into this annuity.
Because they'll do that.
Yes, they will. And that's
This is a big commission.
That's
Unless
not,
you get one with low fees.
That's not what you're looking to do.
Yes.
Right. But considering that as a part of your overall portfolio, one of those 18 different asset
I believe
classes,
it's a responsible thing to do, Ed.
Right, yes.
No doubt about
Yeah.
it. No question about it.
So any final tips for people, things that they should be thinking about, things that they should do that maybe we haven't covered yet?
You know, I keep saying this, and people get frustrated when I say this. They'll either say that, oh, we can't do that till we have enough money, or, you know, you're only talking to millionaires. And by the way, we are here to speak to anybody that truly wants to be financial educated, that is family-oriented, looking for proper planning. We are here for you. Always go ahead and click that link below. We'd love to sit down. One of the team members here at Epic will get back to you. But here it is, folks. And there is no quote-unquote secret formula. There is a legwork strategy that you must do. And that is to make sure your accountant speaks to your insurance agent, speaks to your fiduciary, speaks to your trust officer. Because, Ed, you talked in the beginning of the video about protection. Well, guess what? You need the right kind of documents legally for your business to be protected, right? So you need to get with a lawyer. Within your business, you need buy, sell, and key man, key woman policies.
Yeah.
Right? They have to be structured and funded with the perfect kind of products. You
Yes.
talked about, you know, how to mitigate risk with market volatility. Well, that's a fiduciary conversation with your insurance agent. And by the way, if they're not on the same page, you're not winning. However, if they are on the same page, both sacrificing fees and commission, then you're in a better place. Now, you may not have the ability or desire to sit and speak with all of those professionals, and we always say this.
Right.
If you want us to help organize and strategize all of those different professionals for you, we will.
Yes.
So at the end of the day, it still comes down to high-level communication. I don't mean you don't have to build rockets. All your financial professionals work for you. You don't work for them. And it's important, and you're allowed to ask questions. And by the way, if you ever ask somebody a question that you're writing a check to and they get annoyed, you have the right to fire them. I want to be real clear about that. If you pay somebody and you ask them a question and they get annoyed, you're allowed to fire them. So that should be part of your understanding when it comes to your money. Like I said, go ahead and click the link below. We'd love to spend some time with you. We'd love to answer any questions you may have. We'd love to show you a strategy that sits and fits with whatever your core values are based on the information that you give us. And we're so thrilled that you actually listen to our channel and spend time with us that at the end of the day, there's no obligation. And we're just grateful that you're part of our channel here and our message.